Hey, welcome back. It's JWalter here. In today's housing market update, I have a brand new report to share with you guys that was actually just published today at the time of this video. This is according to Black Knight, and they reported that housing affordability reached its lowest level in the last 15 years. So with that said, let's go ahead and dive right into the video, and I'll share this report with you guys. And of course, if you guys get any value out of this video, then please hit the like button and also consider subscribing as well. Hope you have an awesome weekend, by the way. So this is according to Black Knight. If you're not familiar, Black Knight is a data analytics firm that supports the mortgage and real estate industries. They just published this today, which is April 4th. According to Black Knight's HPI, which is their home price index, home prices rose 1.84% in February. That's nearly 4 times the 25-year average for the month. It's also the 14th month of this pandemic to see greater than 1% monthly growth in home prices in the US. So have a look at this, because historically speaking, home prices tend to increase on an annual basis by 3 to 5%. So to have home prices increase by such a large amount in one single month is a big issue here. So here's Fred's graph. As you guys know, I love Fred's graph. But the source of this is the U.S. Census Bureau, or HUD. So these are basically average sales prices of brand new houses in the U.S. way back since 1963. As you can see, home prices of brand new houses has steadily inclined. Of course, they had the ebbs and flows. And of course, we had their peak in 2007, and they dipped through 2011. But have a look at the acceleration of home prices for brand new houses really ever since Q2 of 2020, when the average sold price of a new home in the US was $375,000. Now it is $477,900. Not too far off all-time record highs. And Black Knight reports that the average home in the US has now increased in value by more than 34% since February 2020, with home values continuing to re-accelerate after a brief slowdown last fall. So in regards to home prices in the US, here's for existing houses. The source of this is the National Association of Realtors. As you can see here, the most recent data we have right now is for February 2022, when the median sold price in the US reached $357,300. That's not too far off the all-time record high that was set in June of last year, $362,000. So we're approximately, $5,000 less than the all-time record highs. We had a seasonal slowdown towards the last half of last year, where home prices tend to level off or plateau in the winter months. But in February, they actually increased. One thing I want to clarify regarding the median sold price in February, though, this is really due to activity from late December to January, because when a home seller accepts an offer from a home buyer, it takes approximately 30 days to close escrow or for the sale to be finalized. So when we're talking about home prices sold for February, that's really based on activity from late December to January and not in February itself. So going back to this report from Black Knight, each of the 100 largest US markets experienced double-digit annual home price growth in February 2022. Home price growth is reaccelerating even as interest rates continue to climb. And they point out that rates have been rising by approximately 1.25% since the start of the year through March. When looking at average mortgage rates on the Mortgage News Daily's website, though, the increase in mortgage rates is actually greater than that. It's approximately 1.65% to 1.7% increase year to date at the time of this video. This is because the average on December 31st, 2021 was approximately 3.3%. And at the time of this video, the average right now is 4.84%. One thing I want to mention to you guys, though, because this can be a little bit misleading, it says home price growth is reaccelerating even as rates continue to climb. In this report, they're talking about February's sold prices, right? So when you go back to this graphic here, we're talking about February's home sold prices. Again, that's from activity from late December through January. The rates in mid-December were approximately 3.2%, and then they ended the year at approximately 3.3%. Rates continued to increase, and they actually increased to 3.68% as the end of January, though. So right now, rates are over 1% more than that. So in this report, when we're talking about home prices increasing, even though rates have increased, we haven't seen the full effects of this, because as you guys can see here, ever since February of this year, rates have increased greatly. So they started off in February at 3.66%. Now we're at 4.84%. So we'll have to see how home price growth changes in the next couple of months, because we haven't seen the full effects of these rising mortgage rates on our housing market just yet. In any case, they stated in this report that housing affordability is now at its lowest point on record outside of 2004 to 2007, with a monthly principal and interest payment for the average price home in the US that's up $329 per month. That's a 24% gain year to date. So it now takes 29.1% of the median household income to make that principal and interest payment. That's up from 19.3% just 15 months ago, and a full 4 percentage points more than the 1995 to 2003 long-term average. It's very important to note here, they're only talking about principal and interest and not taxes and insurance. So we're talking about PITA, which is their principal, interest, taxes, and insurance payment. Again, that's principal, interest, taxes, and insurance payment. I know I talked too quickly here, but when we talk about the full mortgage payment, this percentage of median household income going towards a housing payment, of course, would be much, much higher because they're only talking about principal and interest payments in these calculations here. It goes on to say that 82 of the 100 largest US markets are now less affordable than their long-term benchmarks. Here's something I found to be very, very interesting because they say that a payment to income ratio above 21%, keep in mind now we're at 29.1%, a ratio above 21% has worked to cool the housing market, but record low inventory continues to fuel growth even in the face of the tightest affordability in the last 15 years. So in regards to housing inventory or housing supply, have a look at this. Here's the latest data we have from Redfin. So right now for the 4 weeks ending March 27th, which is the most recent data we have for you guys, right now active listings or the total number of houses available for sale right now in the US is 474,000. That's a decrease of 22% compared to 1 year ago when we had approximately 610,000. But have a look at this because in 2019, during this time, we had approximately 1,028,000 houses for sale in the US, and now we're at 474,000. That's causing upward pressure for home prices given the fact we have a very low amount of houses for sale in the US. Another thing that you guys should be aware of as well, the all-time record low for housing inventory, according to Redfin, was actually for the 4 weeks ending February 20th of this year. And we only had 470,000 houses for sale. Now we're at 474,000. So we're only 4,000 houses more than the all-time record lows that was set last month. And according to Black Knight's president, he had this to say: home prices grew by 1.84% in February, nearly 4 times the 25-year average for that month. And they did so while rates continued to climb throughout the month. Again, February's home sold prices are not related to February's mortgage interest rates because typically we have 30-day escrows for houses to get sold. In any case, he went on to say the following: February's 19.6% year-over-year growth rate marked the highest annual rate of appreciation on record. I also want to share some very interesting stats with you guys to show how increasing in mortgage rates causes an increase in your future mortgage payment. So here's what Black Knight had to say. Entering the year, a prospective home buyer who could budget a $1,700 monthly P&I payment, principal and interest, not including taxes and insurance, roughly the amount required to buy the average home today, excluding taxes and insurance, could afford a $497,000 house. With Freddie Mac reporting the average 30-year rate at 4.42% on March 24th, the same borrower can now afford less than $425,000. This is because when mortgage rates increase, that causes a decrease in buyers' purchasing power. The average P&I payment has increased 24% or approximately $329 more per month, while at the same time, the average home buyer's buying power has dropped by 15%. This is one reason why I say home prices cannot increase indefinitely, especially when mortgage rates increase as well. Another thing they mentioned in this report was regarding mortgage loan forbearance numbers and how that really hasn't caused an uptick in housing supply in the US or hasn't caused a significant impact in housing inventory. So they said homeowners coming out of forbearance, there was approximately 8.1 million homeowners who had been in forbearance ever since it was initiated in March of 2020. Meanwhile, 925,000 have paid off their loans in full through the sale of their house. So out of the 8.1 million people who entered into forbearance, only 925,000 sold their houses. So this works out to an average of 40,000 homes for sale per month, and has not filled this inventory shortage of houses that we need for sale. Meanwhile, less than 750,000 loans remain in active forbearance. So this goes to show how we haven't seen this big uptick in housing supply due to mortgage loan forbearance numbers. Going back about a year and a half, it was very common for people to say that the forbearance programs was going to crash the housing market and was going to cause this big uptick in housing supply. And looking at the data here, that definitely did not happen. So comment below with your biggest takeaway from today's video. Also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Also, check out that link below if you're looking for a real estate agent referral in your neck of the woods. Hope you have an awesome day and look forward to seeing you on the next video.